Hello, it's Robert Miner with Dynamic Traders Group with a short video for our YouTube and Twitter followers. I do this every week. It's a condensed video of the type that I do for our DT Report subscribers for all of the markets that we follow. So I usually focus on one or two markets in these brief videos that potentially have an upcoming trade setup. I'm going to talk about the S&P this week because I think there's a setup coming up this week, probably by early this next week. I'm recording this, by the way, on Friday morning, about 8:30 in the morning on the 24th. So it's even before the market is opened today. I'll also do a brief update on gold and Bitcoin, which we've taken a look at over the past couple of weeks in these weekly videos. So let's get started. Well, wait a minute. Before we get started, I just want to remind you is that it's really important to learn to trade, not to forecast. So forecasting is for suckers, it's for losers, it's for people that want to divine the future. That's not what trading's all about. Trading's about identifying conditions with a high probability outcome that you can take advantage of with recognized acceptable capital exposure. So trading's completely different than forecasting. So these videos are to help you to learn to be a better trader, whether you trade the markets that we talk about or not, because everything I teach you here you can apply to any market in any time frame. Okay, now let's get started. Let's take a look at the S&P. So this is the S&P, the ES, the futures contract, the September contract. It's the weekly data. And a couple of key pieces of information. I always like to focus in. What's the one or two pieces of information that's important that we can use to help us make a decision? One of those pieces of information is that the momentum cycle is bearish. So no indicator, no momentum cycle is 100% accurate. But when it's helpful most of the time, then we want to use that information. And typically, if the momentum cycle is bearish and if it's not oversold, more than likely the market's going to be sideways to down for at least one or two bars. In this case, these are weekly bars, another week or two, net sideways to down. In other words, it's warning us that it's probably not a good time to think about going long on the ES or the other stock indexes. What else? Other information do we have here? Well, you can see I have this count, this A, B, C, D, and that's just one of two or three different potential counts. The important point is that if you're using Elliott wave, which is really helpful and useful to identify markets in a correction or in an impulse trend, any count coming off of the January high is going to be a corrective type count. There is no impulsive, bearish impulsive counts to the downside. That doesn't mean that the ES is in a position to complete that correction. Could have a ways to go. It could be something more complex than a simple A, B, C, D, E. The point is corrective decline, and more than likely it's making a correction against the advance from the March 2020 high. I think it's got a ways to go, several weeks, maybe even several months. But I never want to lose sight of the fact that the decline should be a correction. So the downside would be more limited than if it were an impulsive bear trend. That's an important piece of information to have. But for the immediate term, probably sideways to down, at least for another week or two. So here's the daily data. Again, September contract. What's the important pieces of information? Let me start from the bottom and work our way up. And of course, this daily bar, this Friday bar, this is really just the overnight trading. We haven't even begun, the 9:30 when the active trading really begins. But it's on the plus side, at least going into the opening. But the 8 daily momentum cycle is going to be overbought today. Regardless of what happens during the day, it's reached the overbought zone that warns us that the ES is at or near a daily high. So whenever the daily momentum is overbought and makes a bear reversal, when the weekly momentum is bearish, that's called a dual time frame momentum setup, which more than likely the bearish weekly momentum trend will continue. So more than likely this advance is a correction against a higher time frame bear trend. So let's look at the data coming off of this March high again. It could be a wave D. There's a lot of other interpretations. It's not relevant. We're just looking for a trade opportunity. So coming down, this is an impulsive decline. A pretty good count is a 5-wave, 1, 2, 3, 4, 5, into the low of last Friday. That could be a wave 1 of a higher time frame wave E impulsive trend. The point is it's impulsive. This is probably corrective. When the correction is complete, the higher time frame weekly bear trend is likely to continue to a new extreme. So what we want to do is identify if a market's in a position to complete a corrective rally. Well, it looks like it's getting there, and that the daily momentum has reached overbought, and yet it hasn't even reached a 50% retracement. So the typical correction against a 5-wave trend reaches 50% or greater retracement, and typically is not complete prior to the 38% time retracement, which is this Monday. So ideally, and this is ideal, doesn't always happen, but we'd be looking real closely around 50% retracement at 39.21. If the market were to reach that, then we could say that the ES is in a position, typical position, to complete a correction against a 5-wave trend. And if it tended to be sideways to up into Monday or later, it would be in the time target for a correction. And given that the daily momentums are already overbought, well, that's all the information we need. Before I do a brief update on Bitcoin and gold, just want to remind you, check us out at dynamictraders.com for DT reports. If these are the markets that you're interested in trading and learning how to trade specific trade strategies, check us out. Very inexpensive reports, a lot of information. We'd love to have you as a subscriber and part of our DT community of active and mostly professional traders. Okay, here's a quick update on Bitcoin and gold. I'm not even going to bring the chart up, but Bitcoin, as you know from the last couple of videos that I've done, we identified that it was in a position, at least a potential position, to complete a weekly, if not a monthly low. And Bitcoin's been that great example that when a market gets in a position, you don't start buying or you don't start selling, as you wait for that reversal signal and then a reversal confirmation signal. Bitcoin hasn't made that yet, and this is just fair warning. We've got a specific go long signal in our DT reports, but I suspect if that signal isn't made by Monday, in other words, either today, Friday, or Monday, that then that momentum cycle is going to be rolling over to the downside, and we're going to avoid that signal. It's no longer in a position to consider a specific trade strategy, because I wouldn't be surprised if we see a new low if it doesn't make the go long signal here in the next 2 trading days. So just keep that in mind. Again, not forecasting. It's all about trading. That's how you make the money. How about gold? Gold has made that signal yesterday for a continuation of the bear trend. So the stop out point to that bear signal is very close to the market. So once again, it's not a time to be buying gold for sure. More than likely, it's going to make a new low. Notice they say more than likely, probably, all that sort of thing. But if it does, is keep in mind we're probably about 2 weeks, maybe 3 weeks away from a more significant low in the gold market, and that would be finishing off this 5-wave decline. Again, not a forecast, but a probable setup in a few weeks. Right now, gold's made the signal that more than likely here within the next few days it's going to continue lower. So that's the updates on Bitcoin and gold. Join us at dynamictraders.com. I know you're going to learn a lot, get a lot of useful information from our DT reports and our other educational courses that we have. Check us out. Take care. Be healthy. Be safe. See you in a week.